Let's jump right into the massive June 2026 RBA interest rate decision that's completely shifting our market.
So, after 3 brutal hikes, the RBA just slammed the brakes, officially pausing the cash rate at 4.35%. Don't celebrate just yet, though. Inflation is still way too high, locking these rates higher for much longer.
Major lenders reacted instantly. Today, both CBA and NAB dropped an absolute bombshell on property investors. They officially downgraded their 2026 forecasts, predicting a massive 6 to 7% price crash across Sydney and Melbourne. Tighter financial conditions, sky-high borrowing costs, and recent tax shakeups, they're completely bleeding these southern buyers dry.
We've hit a massive affordability ceiling, forcing those southern vendors to aggressively slash their asking prices. But while Sydney and Melbourne bleed capital, this crazy financial anomaly is just exploding up north.
Shockingly, the data shows this Brisbane anomaly has completely wiped out its historical affordability gap with Sydney.
Get this, Brisbane's lower quartile units are now the most expensive entry-level apartments in the entire country.
Investors are fleeing harsh southern taxes and holding costs, basically flooding the Queensland market with their cash instead.
This mass migration created a massive localized bubble, pushing first-home buyers in Brisbane out of the market entirely. So tell me, what is your exact strategy to survive the highly volatile second half of 2026?
Got property in Sydney or Melbourne? Prepare your cash buffers immediately to survive those coming valuation drops. Looking to buy in Brisbane? Extreme caution is required because you're buying at an artificially inflated peak. Please don't let media panic or slick buyer's agents push you into a disastrous, emotional purchase. To navigate this safely, you really got to rely on the cold, hard data we've unpacked in this explainer. Are you selling in Sydney or taking the massive risk in Brisbane?